Let's bring in Dan Dolev. He's the senior analyst at Mizuho. Dan, let's start with, are we sure, and maybe this is a simple question, that this is the reason why these stocks are down today?
Yeah, I'm pretty much sure that it's a combination of what happened yesterday with the 10% cap. It's kind of the backlash of that and kind of continuation of that, and then also kind of the fear on those swipe fees. So I think the fear is that the president is very focused on payments and not in a good way, and I think that's why the stocks are down.
But why are they down more today than yesterday on this news? You know, it's always fascinating when it takes a day for things to sink in. Sometimes like a Fed rate cut.
I thought about this, heavily yesterday as well, but it's because of what we don't know. So it's down today because people are saying, well, he's now focused on our space. What else is he going to say in a tweet, overnight that's going to cause even more havoc in the space? So I think this is, again, my assumption is it's pricing in something that we might not know, or kind of the uncertainty of what comes next. I mean, That's just my assumption today.
Visa and MasterCard, our audience knows this, better than anyone, but they are, processors. They're not the ones extending the credit. So why do you think they would be affected by a cap? Simply on a reduction in volume, or would it actually get to the heart of a business model that relies to some extent on all of these rates?
So, payments more than most people, because they actually don't exactly. They're just processors, right? And they're just the channel between the banks and the consumers. They make like 10 basis points or 15 basis points, regardless of whether or not it's a credit or a debit transaction. And what I think is going to happen if this actually were to go through, I mean, you need the Congress, et cetera, it's going to throw a lot of people into the hands of like buy now, pay later, like Affirm, right? Or even PayPal. And what's going to happen there is one credit transaction that's gone is going to create 4 buy now, pay later transactions, because people settle those buy now, pay later transactions through debit. So I actually think, in a weird way, it's a positive catalyst, and I'm surprised the market's not seeing that.
That's a great data point. People love it. I couldn't understand why buy now, pay later names were not just down fractionally yesterday. They were down rather sharply. Wouldn't the obvious competitive move be that they benefit from any pullback in credit on credit cards?
Exactly, and that's why I think, what it reminds me of? I mean, we've been doing this for a long time. It reminds me on when the sector traded down when stablecoins first were talked about. It's literally the same pattern. The charts look the same, and you know what it was? It was a giant buying opportunity for payments, Visa, MasterCard, and the buy now, pay later. So I think this could be another sort of massive buying opportunity on those fears.
Do you think all of this is, all noise and no actual policy change? Or do you expect that we will get some changes that will be impactful?
We don't know. Look, there has been a lot of legislation, and I think what's going to end up happening is I think it needs to go to Congress. And I think the president is making a lot of good, good points here, right? It's nothing here is unfounded. I think that the fact that U.S. Interchange in credit is much higher than others. So those things make a lot of sense, but I think at some point there'll be some sort of resolution down the road that might be a little bit worse for the banks and a little bit better for consumers and merchants, but not completely annihilate interchange.